The majority of traders out there have either been burned out or just completely given up because they don't have a system. But over the last 5 years, I've quietly averaged $10,000 per week. And this was all done without chasing hype stocks or having to sit at my computer and stare at charts hours and hours on end. Now let me show you how I built a system that will actually fit your life. Now here's a quick heads up. This isn't a copy me and you're gonna get rich quick scheme. This is not what this is about. What has worked for me might not fit your goals or your style that you're looking for. I'm sharing this so I can just show you and teach you what's behind it. Maybe you could take it and develop it into your own, or just follow it and copy the actual system that I put together. So one of the major questions that I often get is, Mo, how do you find stocks to pick? I mean, it's overwhelming out there. There's tens of thousands of stocks. You have Fox Business here, you have CNBC here, you have X. There's just stocks being thrown in every direction. Today I see there's this Figma stock that's opening at $85 per share, 158% from its IPO price. Final shares jumped 253%. Where do you start? Do you just jump in there and start trading that? If you want to day trade, you can, but I want to show you how you can find stocks. So I'm going to come over here to markets on Yahoo Finance and click on most actives. Now, what do we look for when we're trying to find a stock? What's the idea behind it? Why did that stock Figma today jump 250%? Because it had people buying the stock. And if people are buying the stock, people are buying up shares, what's happening? Well, it's getting volume. Volume is how many shares are being transacted during a day. In an ETF, in a stock, in a cryptocurrency, it doesn't matter. It's the transaction total of all of those shares. Now, we look for things that have high volume. Why? Because if you have something that, let's say, gets 100,000 shares traded per day, let me use an example here. NVIDIA. This averages 192.7 million shares traded per day. If we look here at Intel, 80 million shares traded per day. So you can see it's a lot of shares that are traded. If you have something that averages 100,000 shares that are traded per day, and let's say that the stock price is $3 a share, it's very, very easy for somebody, I could go in there and buy all of the shares of the average for that day. And what's going to happen to the stock price? Well, it's going to shoot right up, but it's a fake out. It's me just going in there and buying the total average volume of the day. What happens when I go and sell? It's going to go straight down. That's why you don't want to trade stocks that have a low average volume with a cheap share price, because there's one person that can control the whole thing. Now, if we look at an NVIDIA, it's $177 per share. I'm not going in there and buying 192 million shares. It's just not possible. No matter how many shares I buy of that, I'm probably not moving the stock price. Institutions can move the stock price, but that's really the only thing that can do it. That's the nice thing about looking at these bigger stocks. Now, how do you find stocks? Well, what I like to do is go in and see what is in the top 25. I want to see what has the most volume. Now, I'm not just doing this for today. I'm doing this for multiple days in a row. So I'm going to write down these 25 stocks. I'm going to write down NVIDIA, Applied Digital, NEO, SoFi, Ford, etc. I'm going to write those down. I'm going to come back tomorrow. I'm going to write them down again, write them down the next day, write them down the next day. Maybe after 7 to 10 days, I'm going to say, okay, here's these 25. Which 10 are in there every single day? Because I can guess based on this that you're not going to get Applied Digital in there for 10 days in a row. You're not going to get Grab Holdings in there 10 days in a row. Probably not going to get Ambev in there. Rigetti Computing, Confluent, Snap, I wouldn't even say is in there. Warner Brothers Discovery, these are not going to be in there. They're having a good volume day. But the reason that we do this for 7 to 10 days in a row is to show they get good, consistent volume day after day after day. That's the idea. You want to trade stocks that have a good, consistent volume because that means people are participating in it. And when people are participating in it, you can follow the crowd. You can get into it. You can catch a trend going in it. So now we talk about trend. Let's go over to a chart. If we're looking at something like an Abercrombie & Fitch right now, Abercrombie it's been out of favor for quite some time. You can see right here, Abercrombie, this was back in the beginning of the year. It was around $150 a share, and now it dropped all the way down to about $60 a share. It's back to about $100, but you can see it's just been out of favor for a very long time. And we can look at our overall long-term trend to see, look, this was out of favor. Anytime you see a trend that's on the bottom like this and it's just going sideways, that's means that it's out of favor. That means that there's not a lot of volume in the stock. There's nobody participating in it. It just means there's some sellers in it. There's more sellers than buyers. And what happens is you just have a small number of sellers. Well, the stock price just continues to go down because there's no buyers. If we go back to volume, remember this is a market. There's a buyer and a seller. If you don't have both, there's no push-pull on the stock. It means if there's only sellers, stock price is going to go down. If there's only buyers, like my example of me buying 100,000 shares of a $3 stock price is going to go up. You need to have that push and pull so that the stock price doesn't move significantly. And that's exactly what you saw here with Abercrombie over a long period of time. It just kept going down, down, down. That's what our trend was doing. But now Abercrombie is starting to creep up. You can see that the trend is starting to move up. And this is an actual trade that I am sitting in right now. How did I know to go long on this trade? How did I know to say, okay, this stock price is going to go up? Well, it all comes back to this trend. This area between these two horizontal lines is called the sweet spot. It's the area where you have the highest probability to make money. When you think about trading, this is not a certainty. I'm not going to win every trade. I might win 60, 70% of my trades, but I am going to lose. I'm going to lose 30, 40% of my trades. That's a pretty big number. You need to give yourself the highest probability to make money. That highest probability comes by executing trades here in the sweet spot. I'm not going to say it's going to work every time, but more often than not, you're going to make money coming through the sweet spot if you do the same process over and over again for a long period of time. Now, as we're coming up through the sweet spot here, this is great. Stock is coming up. I know that volume is coming into the stock. You can come over here. You can see that if you look, volume was kind of down here for quite some time. It spiked, it came back down, but now our average volume is starting to creep up. We're finally starting to get some buyers coming into the stock. It helps that we're on top of this turquoise line, which is the 100-day moving average. Now we're just looking for this thing to move to about the 200-day moving average and hopefully a little bit above the 200-day moving average. But the point of me pulling up this chart is to show you there is volume coming into the stock. Now it all just comes down to the trend. The trend is your friend. If you trust this trend, this area right here that I circled, this is going to be very beneficial for you over a long period of time. If you get 100 stocks that's set up with this setup, you have good volume coming in. We're going to put a check mark there. You're coming through the sweet spot. We have a check mark there. You're buying on these engulfing candlesticks, which I'll talk about in a different video. You can talk about the different types of candles that are out there, but it's your buy signal. If you go through and buy just on those three things, you're probably going to do very well over a 100 trade period. Now, there's more to it. You can put advantage even more on your side. But these three things really give you, and really two, it's volume and trend. If you buy based on those, you're going to do well, and this is how you're going to consistently make money. So picking the right stocks that have good, consistent volume coming into them, paying attention to that volume, seeing that it's increasing or getting better than the past or remaining consistent as the past if it always has good volume, then looking for a trend that is in the sweet spot. Why? That trading in the sweet spot gives you the highest probability to make money, and that's what you need to execute good trades. Now, there's one more way, and this kind of goes back to what I touched on in the beginning of the video. It can be a very lonely road out there. There's a lot of information out there, mostly misinformation out there. Where do you even turn? Well, finding a good system and finding a good community is very hard to do. When I first started out trading, I did not have a community to turn to. It was me and some guy on the radio, and I had his charts, and I hoped to figure it out for myself. And luckily, I was able to. Luckily, I was actually able to work with him. He became my mentor. It turned out to work really well. But I had somebody to turn to. I had a shoulder to lean on. This can be very confusing. This is a new language. Seeing these charts might look, you might say, hey, I've been watching these charts for 15 years on CNBC. I understand them. Well, there's a lot of little nuances that you don't understand, and that's okay. That's what I'm here for. But we also have other community members. In the Patreon community, we have hundreds of people that work together, that bring stocks to each other. Now, I brought up the community and saying, how do you find stocks? Well, you can go and do what I told you to do on Yahoo Finance. It works great. But you can also talk to the community members. If you look at my watch list right here, Duolingo, Abercrombie & Fitch, and CCL, these are the three stocks I'm in right now. That's what these red flags are. Those were all brought to me by the community members. I put them at the top of my list. I also have my community watch list here. Community is also in Duolingo. But you can see, Insulet Corporation, I've never even heard of this in my life, but It's really high on my watch list. Why? Because I'm in the sweet spot. I'm coming down. I'm going to go short on this one. And I'm looking for this to break some type of resistance. I don't even know what that company is. Doesn't matter. It doesn't matter what the ticker symbol is. All I care about is volume and trend. It can be anything. Same thing here. Not there yet, but same thing there. Again, same thing there. We're waiting for it to break down. Disney's a very interesting one right now. I'm waiting for this to get into the sweet spot, break this support level, and start moving down. But you can see these stocks were brought to me by the community. It's a great place to be. If you're not in our Patreon community, the link is in the description below. Click it. Try it out for a month. Try it out for 2 months. What do you have to lose? What do you have to lose? Give it a shot. Now, this is just a little snippet of the overall. I made a course. It's about 2.5 hours long. It's chaptered, so you can go back and watch certain things that you want to watch. It's all bookmarked. Go check it out. It's going to be your Bible when it comes to trading, and I will see you in the Patreon community. Check it out right here.